Another major retailer released Q2 earnings. Walmart today reporting nearly a 5% jump in profit and sales. They see 4.8 on both sides, despite the pressure coming from tariffs. We'll talk about that. There's also this new trend we mentioned emerging in the job market. They call it job hugging, or holding on to roles regardless of how satisfied you might be with those roles. Our money man is Doug Flynn. He's on top of all of this. Hugging his job, I would think. He joins us now. We'll talk about that in a second. Anything from Walmart? I think forecasts looked okay, but their earnings last quarter were short of estimates that stood out to you.
Yeah, that's the first time they've missed estimates in about 3 years. But their forward guidance was really good, and I think that's what kept the stock from falling a little bit further than it did. It fell about 5% today. But anytime you can get a retailer like this, and it's such a well-run company, and it's below $100 a share, that is pretty much close to the high where it was in February. That's the kind of opportunity you're looking for, is this, because, you know, they're not missing on every front. They're running the business well. They're managing this through it. It is tariff related to a certain extent, because even though they've done a great job of keeping the lid on prices, as they replenish inventory, those new inventory purchases are with some of those tariffs. So they've had to increase some of the prices, and so we're seeing a little bit of that there. Yeah, and you used to say that Walmart, probably do say this still, is kind of like an economic report, since it's so big and it's such a gauge of the American consumer. And you're saying that, you know, it basically says things are okay, you know, great, but okay, not terrible. Yeah, in the short run, they fell a little short, but that's just running through all the different variables. But the long-term outlook is still good. So I think it is a great barometer for the U.S. overall for that reason exactly. As we muddle through it, the long-term is bright, but we kind of got to get through this on the short run. Yeah, we wonder about the consumer, we wonder about spending, we wonder about tariffs, but also about jobs. So that's why we wanted to bring up this trend. We showed you the Axios article on job hugging, all right? So job hugging. Labor market is grim at the moment. Hiring stalled, and with fewer options, workers are planning to stick with their current employers regardless of job satisfaction. Pick up on that and, you know, what it tells you, and also, I think, when it might change. Yeah, it's, you know, for so long the employees have had the upper hand in demanding, you know, all the rules, and a lot of that had to do with the fact that there were more jobs than employees. And so as the job market got weak, this is what I've been telling people that are under 30 for the longest time. This is not the job market it always is. Anyone who came out of school like maybe you did, and certainly I did, in the early 90s, it was a recession, and it was 2 people for every job. It was the complete opposite. So they don't really have that sort of situation that they're familiar with. And so now you add in AI, and you've got a weakening job market. And so some of this is shifting back to the employer side, where the employees don't get to make all the rules. So people are hunkering down. And it gets back to the same thing. As things retrench a little bit and they don't grow and there's not a lot of opportunities to go elsewhere, you have to look around and say, hey, am I working harder than everyone else around me? Because if the AI bear is chasing me, I got to just be faster than this guy. So that kind of thing is what you need to do. Whether it's a recession or AI coming after you, kind of make sure you're working as hard as you can to keep the job if you like it. And if you can't, obviously try to find something else. Try to find something else, but people are, you know, there's not as much out there. But I was going to say timing. Yeah. When you bring that up, it does matter. You know, I hate to say it, Doug, but you are a little older than me. I mean, that recession, as I was in high school, it didn't bother me that much. Oh, damn. So later in the 90s, when I actually did get out of school, you know, the job market was in a much better position, right? Remember that? Yeah. So like when the tech boom, so the timing matters for young people, especially. It does. And you don't really have control over when you got out of school and when your job situation is. And we all have recency bias. We think how it's been the last 5 years is how it's always going to be. And it isn't. So you just need to prepare for that and just make sure that you're in the best situation you can. You may not have all the opportunities to hop around that you did with all the demands that you did. So you just got to get yourself in the best situation you can, because those things are definitely going to ebb and flow. But it is shifting back to the employers who are getting more of the control over the situation. And so that may mean that you might not have all the same flexibility you used to have. And so we're seeing some of that. And so that's where the hugging comes in, is they're hanging on to the job because they don't want to move around. Because again, the grass oftentimes isn't greener when you get there. What you don't like about this, you might not like something else somewhere else. So, those are some of the lessons, exactly. Now, and you look great, by the way, Doug, with all that experience. Thanks. Thank you, my friend. Doug Flynn, closing bell time.